Okay, good morning, everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, January 11th. Great to be with you guys this morning. Christopher, Mark, Peter, Pete, and Peter. All three of them are in here today. Pooja, great to see you. Tom, Ziad, always a pleasure. Hey, Habib, great to see you in the room. A lot of questions coming through early in the session here, guys, so I'm going to get to all of them as always. Interesting price action. Things have been kind of tough. These ranges won't break. Euro obviously found some support and rebounded on some of the Euro crosses that we've been covering. DXY still holding 92.60, 91.90. I mean, it's the same, godforsaken range that we've been talking about since the start of the year. So things are acting kind of weird. We'll go over all the crosses. On the menu for today, obviously DXY real quick. We'll go over all the sterling crosses we've been covering all week. So pound dollar, pound yen, pound CAD with a nice reversal yesterday, pound Aussie, pound Kiwi. We'll take a look at dollar CAD, which is coming into near-term resistance as we speak, as well as crude prices, which continue to charge higher. And then we'll take a look at some of the Euro crosses. So Euro dollar, Euro Aussie, and Aussie dollar. Any other questions? As always, feel free to throw them on the message board at any time. Peter, good morning to you. Same to you, Pooja. Habib says, good morning. I have been a member for some time, but this is my first time in here. Well, welcome aboard. I usually look for charts on the website. The first chart I look for is SPX, and I rarely find one. Could you please cover it today, the weekly, daily, and 4-hour, and post them regularly in the website? Thanks. So, Habib, I don't really actively trade intraday the SPX, but absolutely, there is nothing you can't ask in this room. So you're in the right place. Good to see you here, Habib, and we'll definitely take a look at the SPX. I don't have any charts ready for you, but we'll jump right into them. No problem. Pooja wants to look at, wow, Euro Aussie. Good thing I didn't touch it. Yeah, it broke through that major key pivot, went lower, then reversed right through. So Pooja, I'm with you on that. Euro in general is acting a little funny this morning. We talked about Euro Yen, so Pooja, we'll add that to the list of Euro crosses as well. And that gives us our list. As always, feel free to stop me at any time with any questions, guys. So real quick, I don't really have much on the DXY to update. This is the same, like I said, the same range that we've been talking about since the start of the year, 91.90 being the 786 retracement of last year's advance. The monthly opening range low comes in just lower, 91.80. Near-term resistance in the opening range high for the month comes in at 92.60, 92.59. That's also the former swing lows here and pivots that we've made in price in the index. So, look, the game plan for me was to play this rebound, looking for it to stretch into basic trendline resistance just off the highs that we made in December. Obviously, we came into near-term resistance, slammed right lower, near-term support, and we're just holding this range. So I really can't stress it enough. As far as the near-term outlook here, we need to get some clarity and finally clear the monthly opening range. Until we do, it's ping pong. 91.90 support, 92.59 resistance. We got to look to see that consolidation break finally give us some tell. Remember the analog again. I'm going to keep drilling it into your heads. Obviously, Jamie will be up shortly after this webinar, guys, at 11 o'clock with the midweek strategy webinar. So hopefully he'll have a little bit more clarity for you on some of these crosses that seem a little foggy here for me. But just keep your eye on this key range. And obviously the implications for the Euro, we got stopped out obviously on the swing trade for the short side there on a 20 pip wrap. So that's still holding the same range though. So I don't want to get overly eager on anything, okay? Look for this range, 91.90, 92.60 to give out in the index. Ultimately, like I said, the analog that we've been following does call for some sideways price action to higher early in the month before final resumption to a new low, which really puts the emphasis on this. Okay, if this gives out, 91.33, 91 are going to be our initial targets on the downside. Okay, the ideal scenario, like I told you, I was looking for the stretch into this region. As you can see on the daily chart to the right here, you got the 2016 low day close, you got the 100-day moving average, former slope resistance, all converging right here just above 93. Obviously, that would need us to clear this range. So, gonna leave it at that. If you have any questions on DXY, let me know. No changes to any of the levels that we highlighted earlier in the week. So the DXY update here, all the same levels are in play. We've scratched this slope at this point. Just focus on this key range that we're continuing to hold in. All right. So that's the DXY. I'm just going to run through this so we can get into some of the more juicy pairs. I want to jump into sterling crosses first, just because you're seeing some very interesting price action. We're taking note of this on the sterling crosses. Some of the sterling crosses trading heavier. Sterling was weaker against all its major counterparts yesterday, save CAD, which obviously the CAD saw a massive sell-off. Dollar CAD higher, pound CAD higher. That was actually prompted by some news wires. Guys, I was sitting right at the desk. It flashed across the terminal. It didn't really occur to me as something that was going to really move the markets this much. But just that there's some commentary coming out of the administration and the White House that they are indeed closer to pulling out of NAFTA. Now, that's nothing new. We've been hearing this for a while. I'm not sure why the markets decided to react on it. But you saw the CAD with that really sharp sell-off. So we'll go over the CAD crosses in a moment. First things first, pound dollar. And bring your attention to this weekly chart we've been following for over a year now, okay? So the major critical support's down at 133, just to put things on par. 130, I guess the marker is covering it right here, the 2017 high week close. Let me bring up the weekly charts here for the pound. What is that? Right here. 34.95. Okay, that's near-term support on a daily cross on a daily basis. We've dipped into it. We need to see it close below it. That would leave the near-term outlook continual, still looking vulnerable for the sterling, looking for the pullback. I'm not necessarily sure we'll get the full extension to that level, but this is the only thing that would turn me bearish on the broader trend. All things held constant, this is still just a pullback within the broader uptrend. Now, we've noted over and over again this week that the seasonals for sterling are pretty weak. January is not a very good month. In fact, it's one of the weaker months, or the weakest, if I'm not mistaken, for the pound. So shouldn't be too surprised to see some sell-off here. The levels that we're trading at, again, just below last year's high, could get some more kickback. So the weekly chart still showing that threat, right, that risk of a material pullback in sterling. Here's what it looked like on the daily chart. High day close, 34.95, same level. Okay, former trendline resistance, now support. We're still trading there. Intraday chart had a level just lower, and that was 34.56. I'm going to show you in the live chart in just a moment, but this is a former pivot dating back a couple of months, and it converged on basic trendline support, extending off the low. So the game plan that I gave you guys was looking to sell rallies while below the weekly open. Okay, that was like 35.75 and 35.89. Okay, the high close from last year is going to continue to remain our near-term bearish invalidation level. So crack above this, look for a resumption of the broader uptrend, looking 36.58, 36.75. Not the favorite scenario at this point. The favorite scenario was to sell rallies while below the weekly open, while below the upper parallel, looking for a break below 34.95 to get us that 34.56 clip. Well, in overnight trade, that's exactly what happened. You saw the break. It dipped right into that level, almost to the pip, before rebounding slightly. And the focus is still on a material breakdown if we break below 34.56. Here's the live charts look like right now for sterling. So the daily chart, there's the dip and recovery. Again, the daily close below this level is really what's needed to materially shift the focus lower. There's that perfect tag of 34.56. Again, 34.56. Just a former swing pivot high, former swing lows. Very nice eyed region here. And again, basic trendline support off the lows gave us a perfect tab. And here's the rebound. So same game plan, nothing changes. I do think that the upswing here, just based on the magnitude of the rebound here, could see more heading into the U.S. trade session. But the game plan remains unchanged. Game plan remains unchanged. You're still at risk for a move lower below the weekly open. And this is the break that would open up 33.89. More importantly, 33.20. That's a big region of possible support here for the sterling. All right. So all things held constant, sterling dollar specifically just made a defensive support. Okay. Now the dollar obviously is trading weak. We looked at the dollar index just a moment ago, but that hasn't broken support. So I don't want to get too excited on this short dollar cross just yet. Obviously, tomorrow is the major event risk for U.S. crosses. You do have the consumer price index for the month of December, also expecting advanced retail sales on tab. So the consumer price index, we're expecting a softer print at 2.1% year on year versus 2.2. Remember, I'm going to keep stressing it. That's the Fed's laggard of the dual mandate. So inflation really, is sort of the main picture here that the Fed is concentrated on. Month on month, we're expecting a little bit softer of a read, and nothing too crazy, 0.2%, but nothing too crazy on that front. Retail sales, we're expecting a little bit softer print as well, 0.5 versus 0.8 last month. So, these data prints, while they inherently won't necessarily be a major market mover per se, they are going to be the first gauge that we get on how fourth quarter did. And with the strong third quarter that we had, certainly, there's going to be a lot of emphasis on how both the retail sales picture look and the inflation outlook looks. So keep that in mind tomorrow, 8:30 Eastern tomorrow morning. As it stands for sterling, this rebound probably still has a little bit more to go into the U.S. trade session. Again, looking for exhaustion ahead of the weekly open. Needed break below 34.56 to really get this thing going for a larger decline. Questions on the sterling? Everything on this thing looks exhausted. We talked about the momentum divergence that we made into that high. We talked about this support trigger that gave out on the pullback here and acted as resistance on the way up. But even in near-term price, 40 holding support, this thing could still has a little bit more of a rebound here before we start to break down, I think. So the tricky part in this, again, is the dollar doing what it's doing. Until we get some further clarity on this, keep your eye focused on 34.56 as the support break, resistance at the upper parallel. Questions on sterling? So no change to those levels from yesterday. We just dropped into this key point, rebounded, all levels remain the same. Next up on tap, pound yen. Another one that was a very impressive reversal that we saw this week. You're seeing a little bit of a support bounce today again, but the breakdown was pretty big. It took us back below that 38.2 long-term retracement, former swing pivot lows from back here in 2016. The weekly chart just looked heavy. We've been marking divergence all throughout this advance, and it leaves the risk for a pullback. Pound yen on the daily, basic slope support, pretty major break, fueled a drop into this little parallel here, or this little slope here. So this is a basic 2-point touch trigger support I noted yesterday. And I said, this could offer a little bit of a support bounce, but ultimately you want to stay bearish below the monthly open here. So for pound yen, I think you got a little bit more of a definitive move. And I still think you have to respect the possibility of further downside before this thing rebounds, or before this thing resumes higher. Again, we're still within the broader confines of an uptrend off that 2016 low. But as it stands right now, still looks a little vulnerable. So at near-term support, the big level here, the big pivot, 149.53, 149.75, that region is massive. 618 retracement of the advance off the lows they made back here in November. Obviously, the swing lows from December and a nice pivot low from back here in September. Nice region of support right there. Here's what it looks like on the intraday charts from last night. We added, we were working yesterday in the webinar with both this longer-term pitchfork and this near-term pitchfork just off the highs we made in December and early this year. Gave us a little bit more conviction on the confluence regions. Okay, so the 50 lines both converge right here at 150, 150. I still hold that as resistance in pound yen in the near term. 50.32 was the near-term support that we were looking for. We got that tag. The bigger level is 49.53. Here's what pound yen looks like now. Okay, let me take this back a sec. So again, you're seeing a little bit of a hang up here on that near-term basic trendline support. There's the 50.32 clip. We got that. Here's a little bit of a rebound. Again, 51.50s, even ahead of that is where I would look for this stretch to find resistance if we do move higher. Ultimately, still think you get a move lower here towards 49.53. But for re-entry, my problem is I have no definitive stop. I would love to get back in this if we get to 51.50s, but I would need to see a spike high, a pullback, then the recovery to sell against that high. Okay, don't go chasing on these markets, guys. This is the worst market condition to be chasing in because nothing's lasting. The moves are stretching and they're coming right back. Dollar index makes a move, comes right back. Euro, perfect tag of that 120 target we were looking for, moved all the way down sub 120 to the 119s and change. Then here we are right back up again. So, you know, I remember earlier in the week when we were talking about Puja and we were talking about the little rebound there, right? Why'd you get shaken out? And she was because we're trading counter trend. And I 100% agree. This is the market where you want to be full in, full out, pretty quick, because just the moves aren't lasting. They're very, very short lived. So on a stretch higher near 150, 150, I'd be looking for a possibility for resistance. Break below 50.32, 49.53. Beautiful level. Okay. Specifically heading into the start of next week here on the 15th, you got the median line for the broader scope, or the near term slope rather. You got the median line for the longer term pitchfork, and a basic 618 retracement from the advance off the lows we made in November. So really nice spot there as far as the downside target here on the pound yen decline. Questions on pound yen. Now, obviously, all the yen crosses are of great interest. I see your question there on euro yen. We will get to that in a moment. But any questions here on pound dollar or pound yen? The other one on tap yesterday that I covered was this will be 2, 3. This will be number 4 is pound CAD. So the pound CAD chart. Look, this was the only positive performer for the pound yesterday. It was weaker against every single currency except the CAD. And you know, when we see some more broad-based declines in a pair, I'd love to look for sort of what's bucking the trend. What can I use as sort of a synthetic hedge? If I'm holding a pound dollar short, or if I'm holding a pound yen short, what's a pair that will be most vulnerable, or would be best to seize an opportunity for a little bit of recovery? And I think pound CAD was it. You're looking still. You didn't get it last night for 70.28, 70.29 on the stretch higher. A basic 38.2 retracement from the decline off the highs in November of last year, but you're also looking at basic slope resistance. Okay, so I was looking for a stretch here to see a reaction at this level. We failed just to head an overnight trade. We're sitting on 69.25 as support, noted yesterday, and that's still the near-term support structure. Here's what pound CAD looks like. I didn't include the daily charts and the weekly charts on this just because I don't really think that I want to get too involved on it. I'm not really very impressed with the charts, but here's what the daily looks like. Again, the 50% retracement, this encompasses all of 2017 trade. So a 50% retrace of the yearly range, 200-day moving average, nice spot for this thing to find a little bit of a support bounce here. Now testing monthly open resistance. That's exactly where this thing kind of capped out and is holding resistance now. Like I said, near-term slope off the high still leaves a little room for a stretch higher here. But both of these levels are going to be levels I'm watching with great intent. I do think pound does get higher here towards one of these targets. And this is the tell, okay? These are near-term resistance. And also this specifically is bearish invalidation. All the other pound crosses seem kind of heavy. If we break 70.83 on the pound upside, I do think you get the larger recovery if that scenario pans out. All things held constant. If you're holding long positions, you should be looking for exits here. Same respect. I'm actually looking for a possibility for exhaustion at one of these two levels for recovery play downside in pound CAD. But again, tread lightly, guys. Tread lightly. The reason I've been focused on all these crosses this week is just because there's more juice for the dollar. The ATRs are wider. The dollar crosses are kind of tightly ranged, tightly wound up. Data for the U.S. doesn't come until later this week, so the crosses have kind of been where all the action's at. So pound CAD, 70.28, 70.83, both levels of interest for resistance, i.e. near-term exhaustion on the upside. Any questions on pound Oz, or pound CAD rather? Okay. Pound Aussie was number 5 from last night. And then, this one was a little bit cleaner in that I just loved that we were talking about this. Who asked about this here in the room yesterday? Was that you, Christopher? I think it was you, right? Pound Oz. And when you first brought it up, the first thing that we looked at was, or the first thing that came to mind that you heard me say was range. Range. It's been there since basically the December lows. 73.46, 74 was the bigger one. That's just been a major range that we've been in basically since that December low. Okay, so this break yesterday was worth looking at. And once you kind of saw that break, here's what it looked like on the daily chart. You have basic 50 line here for the slope that we've been following, which also gave out, okay? This brings into focus a major near-term support structure, and that's defined by 70.83 into 171.20. Or 70.80 rather into 171.20. This is just a basic 50% retrace from the decline, or the ascent rather, off the August lows of last year. More importantly, it's also 2017 open and has been a clear pivot in price all throughout last year. Support, support, break sees acceleration, resistance, 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 break, instant support. A little messy here as we opened up November trade. Here we are again. Okay, so for short exposure, that was sort of the first level of target interest that you want to look for as far as support's concerned. Near-term resistance right back at the former range lows at 172.10, 172.11. At this point, I do, if this thing has further legs to the downside, the weekly open should really max out any type of advances at 72.37 on the upside. Okay, so look for a reaction here. If we do hold 72.37, you look for that initial target right back in this same range. I really can't stress this range enough, guys. Beside it being the 2017 open, beside it being, a larger or the near-term 50% retracement, it's also the longer-term 618 of this range and the 100-day moving average. Okay, so a lot is nestled in that region. Worth a bounce? Sure. Change the direction? Not necessarily. Okay, even if you get back up into the 50 line, again, like I said, monthly open resistance, you'd look to fade that move. And if we break lower, it puts this thing on a more correctionary path, targeting 69.70s, basically the 200-day moving average. And again, right back at that 618 near term, takes you 68.60. The weekly chart for pound Oz, the only thing I wanted to highlight here is right here. And 68 and change is where structural support shows up on the weekly chart, not only in the lower median line parallel here, but also the longer running 52-week moving average, which has been obviously a decent pivot in price last year. So long story short, you're at a big support structure. Keep in mind that this would constitute the 5th consecutive weekly decline. You know me, I love looking at the consecutive measurement of how many consecutive days down or up markets have seen and what have happened in previous instances. Like I said, this will complete 5 weeks down. Last time we saw that was here. You got a near-term bounce. Okay. Privy to that was here. That didn't give you anything. You saw a doji the next day before completing lower. And then the previous one to that was right here. And that saw a little bit of a rebound here. So looking at this thing just objectively, 3 out of the last 4 times did produce some sort of near-term rebound. Now that's on a 5-week close lower. So that would mean that we would need to close this candle, more or less below the open for that sort of, type of analysis to give you a suggestive move that you could see a rebound here. But long story short, below here, there's room for a 68 and change drop on pound Oz. Any questions on this one? Things I don't like about playing pound short here versus Oz is just the fact that the momentum signature, it's just, is that a 40 break? I don't know. Markets don't work in a vacuum. 38 and change as support still suggests that markets might not be quite ready for the turnover just yet. Also note that on the lower low close here, this would actually mark a divergence signal on daily if we close at these levels. So some really interesting stuff. It kind of ties your hands and you don't know what to do near term. And guys, I think that's okay. It's early in the month. I do not want to get too aggressive on anything. I've been all over the place, in and out, real light, a lot of break evens this week, but market conditions are tough and things will change. As I said earlier in the week, the longer that this kind of stale market, crappy conditions last, the more encouraged I get, because that just means something's right around the corner. And historically speaking, periods of really low contracted volatility are followed by huge spikes, typically in broader vols. So Patience pays. I think we'll get that clarity. If you haven't gotten much on this week or took a couple of hits there, don't worry, brush yourself off. Things are just getting started. Okay, so that is Sterling Oz. Any question on any of the Sterling crosses? The one last one that we want to cover is Sterling Kiwi. This is the one that we talked about earlier in the week. Initially playing the long side, I took a 70 pip gain on a quarter of a position size, and I got stopped out on the rest. And it's a good thing that we played so cautiously, because guess what? That rebound was very short-lived. Like I said, as soon as we took that break-even stop, we were talking about this yesterday, right? The fact that, look, it was breaking that confluence support, but I don't know. If it had closed the day back above 188, I'd still be looking to play the rebound. Well, long story short, we closed well below. Keeps the focus on the downside. Again, near-term support. That 86.41 level is that 38.2 on the daily chart that we were looking at. Near term, just a 50% just off the advance from the late lows that we made in June of last year gives you a little bit lower at 85.87. But on this trade, downside break of a descending formation, this thing could still see acceleration. This thing could still see acceleration. Now, taking every trade on its own merits is always something that we encourage, but certainly Kiwi still looks tired versus the dollar. I still think it could move a little bit higher, but a Kiwi pullback would certainly soften the downside here. So what do? Take every trade on its own merits. Right now, this thing still remains vulnerable while below that lower parallel. Just that stretch lower, there's still that 85, 87 barrier, so keep your eyes on that. Okay, near-term bearish invalidation now dropped from 90.50 to 89.85. All right, sometimes you're right. When you're wrong, you're wrong. We were looking for support at confluence resistance support right here. Didn't work. Got to keep looking lower. Questions on pound key or any pound cross for that matter. Okay, let's take a quick segue. We'll talk about dollar CAD, and I do want to jump into the crude prices because that was something that we've also been covering very closely here. Dollar CAD, like I said, there was that headline yesterday that hit. Markets just ran with it. The fact that the U.S. Was more inclined at this point to jump out of the NAFTA agreement, and it charged a rally, but the rally came right into two areas of interest for resistance. The monthly open resistance comes in right here at 125.79. Just higher, you have those former swing highs, 125.97, and the 100-day moving average. So full round trip, clean monthly opening range. We're now at resistance. Look for a break of this range for a more definitive medium-term bias. The level of which we rebounded off of, we talked about this in depth last week, at the beginning of this week, the fact that the close on Friday right above that level, or the failure to close below that region, really kept this thing precarious position for more of a stern rebound. The near-term charts didn't, well, let me take a step back. Things were slow to start off the week, right? Here's that announcement yesterday. We were sitting right at near-term resistance, 124.85. I think that's where we were in the webinar yesterday. And the breach through the parallel, which we had marked at 125.30, got taken out. The final target at 125.90 is right where we're trading, or where we petered out today. Okay, so again, you bring this into the daily chart. There's a lot there. Near term, there's also some swing highs, 38.2 retracement. Okay, former swing highs. Nice area of initial resistance here for dollar CAD. Questions on the loonie? Now, like I said, we're at resistance. Weekly opening range is set. If you get a pullback off that level, you want to treat this as a range, just as we're doing with the dollar index. A breach above, close above 126. There's a bigger recovery going to be on play here. So range. It sucks, but that's the condition we're trading in, guys. That's the condition we're trading in. Dollar CAD, any questions? I do like the approach. We were looking to play the rebound off of this clear structure here that we were talking about last week. But for me, this was the last thing to play on the upside. So right now, I need a little bit more of a definitive price action. Either we rebound back below the 50 line here and look to play the extension back to 24.20, or if we break higher, it's still not a buy. You need to wait for the pullback in such a scenario, but you'd be looking to play up in 26.60s, and then the median line comes in somewhere around 27.30. Questions on the loonie? So for, everyone always likes to kind of correlate the two, not necessarily that they're necessarily in lockstep at this point, but crude prices. Look, 63.23 was the level that we had flagged as our last sort of area of interest for near-term resistance, and certainly an area of which we were looking for exhaustion. You didn't get it. You didn't get it. Not only did we close that, stretch high right here above on the 9th, but yesterday we basically put in a doji right at that high, still closing above 63.23, and then here we are again. Remember, next big level, sort of skirting on the table, I think, is still 64.78 on the upside. And that would be a completed 100% extension. Okay, just to give you a longer term picture, here's what crude prices look like. On the daily chart, this would be the 100% extension from the advance off the lows you made in 2016. Also, looking at this from the weekly standpoint, certainly continues to highlight that same level, 64.78. This slope that you're looking here on the weekly chart, guys, is a little different from the slope that we're looking at on the daily chart. And this sharper slope puts the median line right there on 64.78 as we close out this week. All right, so yesterday you did see a little bit of a draw in crude oil inventories here, which were released at 10:30 Eastern in the United States. Obviously, that's offered a little bit more of a support hold. There's really nothing here, and especially with the losses that you're seeing here in the greenback today, there's really nothing here to necessarily put us in a bearish stance. The momentum signature is still an overbought. That's not when you want to fight it. We just cleared the 2015 highs on this stretch. Structural resistance measured, Fibonacci resistance coming in at 64.78. By the way, if this were to break, just to put things in perspective, I'm not saying it's going to happen, but you really look for, an extension above 70. And that would be, what, a 4-year high? Since 2014, we haven't seen those prices. So crude looks like it's going to be a strong month. So it's going to be a strong month. Last January was kind of a wash for crude, actually ended up the month lower. The January before that was actually a weak January for crude. The January before that was actually a weak January for crude. So January is typically not a strong month, at least over the last 5 years running. So it's interesting to see that this breakout that materialized late last year is still carrying over into the new year. Bullish invalidation for the broader uptrend obviously is all the way down at 60, 59.94. So for the broader uptrend, as long as we stay above 60, this thing is still constructive. Look for near-term resistance at 64.78. Any questions on crude prices? Number 7, number 8. Okay, let's hit euro, shall we? First things first, euro dollar. So obviously, things didn't pan out quite as expected. Here's what we've been following with the euro. We were looking for more of a bearish stance, sub 20.92, for a move below 20 to really get this thing going. You got the break, you got 1965, and then the recovery offered Jamie the swing trade entry at 120 that we were looking at, and we slammed all the way back sub 20 again. But guess what? Range is a range. We came right back, and we're right back above the 120 handle now. So here's what euro looks like. On whole, the picture doesn't necessarily change, but trying to squeeze a trade out of this, I think, still is pretty difficult. It's pretty difficult. So, here's the euro dollar on the weekly charts. Okay, we talked about the 2012 low. And that's basically the level of which we're still unable to close above. We tried to close there last year. The close was actually right there. 2035 is where we actually closed. The high close or the high day close, high week close for last year. We pull back. There it is again. So the game plan was for stretch into the 50 line, maybe even as deep as 17 and change to get back on the long side, targeting 121.67. Inevitably, 123.29 is the game plan. What do you do here? What do you do here? Not much, in my opinion. Here's euro dollar on the daily chart. Near-term descending formation that we've been following off the highs from just back in August and September. Median line parallel resistance, breach, support, right? So at this point, you have the monthly opening range at 119.30 into 120.29. Very, very, very well defined. Near-term chart looks like this. So yesterday in the webinar, we were stretching higher, and I was telling you guys, I wouldn't even be surprised to see a stretch into 130.35 or 120.35 that we talked about. Well, here it is. Okay, so I'm going to scratch this slope right now because we've obviously compromised that. And we're just going to play the lateral levels. Ideal scenario, guys, this thing stretches a little bit higher into former channel resistance, find some resistance, even if we get a tag of 2092. Well, let me do this. Here's your two topside targets that you still want to be mindful of. Boom and boom. And on the daily chart, that 2125 target, that's what's reflected right here. So still areas of interest for exhaustion. If the dollar is going to find some sort of recovery, euro should really be capped by one of these two levels near term on this advance. But till we do, just treat it same thing as the index that we're looking at. Same thing. Gotta clear this range. Questions on euro? Euro Aussie. This is for you, Pooja. Good thing she doesn't touch it, she says. So here's Euro Oz. The game plan, very similar to Sterling Key. And in fact, it's funny because when we were talking about Sterling Key, I said Euro Oz, I actually worked a little bit better because the extension off that rebound confluence support actually gave us a pretty big stretch, almost 120, 130 pips to the upside. So the pullback and this fake out move here means nothing to me if we close above. If we close above 152.26 today, we've been watching that level for quite some time. That's the June high, a decent pivot in price. We talked about the 100-day moving average. We talked about the lower median line parallel, the fact that we probe below it. And if we close above it, it'd be the same thing that we were looking at last Friday with dollar CAD, right? Dollar CAD coming into that big, big region of support. We spiked below, closed above. I had a question in the webinar saying, Mike, for you, is that an entry? It might not be the entry right there, but certainly for me, I was looking for longs right after I saw that. So today, same type of deal. Okay, if we get that close above 52.26, to me, that would be a near-term reversal pattern. On the stretch, a couple things that you want to note is you're looking for initial resistance basically at 53.50s. 53.40 is the weekly opening range high objectively. But if you look at this on the daily chart, basic slope support, one touch, two touch, three touch, essentially. There's the break. That level converges just a bit higher is going to be your monthly open resistance. So right around here. Okay, that gives you the down slope that we're looking at here on the intraday chart right here. Median line and the monthly open. So Euro might not be ready to break down any further, to be quite honest with you. And if Aussie pulls back, we've been talking about Aussie all week long. Here's Aussie dollar coming right into 78.86. Guys, this is the level that we were talking about here back last week. All throughout last week, that was my target on the long. That was also my area of interest for entry on the short side, a possible exhaustion trade. Just basic slope resistance, key 618 retracement, former swing highs from back in October, big region. Basic slopes resistance off last year's spike highs here. Big area. I know Jamie's looking also at this region being something pretty big. You know, if we get the momentum push below 70 specifically today, a nice divergent signal into that high would be great, and would further add fuel to the fire. But until we do, you know, 79 is my line in the sand. Okay, probes into 79 should really be capped if Aussie is going to turn lower. And remember, the premise of the idea for looking for that last high into 78.86 was wave 5. And if this is going to be the completion of the fifth wave, you'd look for a near-term correction, ABC pattern, whatever type of near-term correctionary counter-trend pullback before resumption. So the Aussie risk is still there for the pullback, which why for me, Euro Aus, I still think has the possibility of giving us some juice on the upside here, especially with this kind of reaction at confluence support. Does that make sense, guys? So while it might have been something a little weird, Pooja, to check it out today, it's actually pretty encouraging. I like this price action, both the reaction that we got, where we happened, when it happened, and we just need a daily close above this region to really suggest that, you know, near-term lows in place. You know, there was so much emphasis on this region, and even in near-term price, guys, you know, divergence on that low. Price action making a lower low on a closed basis, the oscillator making a higher low, former trigger resistance. So this is what would have put us bullish, essentially, at least on a trigger basis. The pullback in momentum finding support ahead of former trigger resistance. That's constructive. That's constructive, or I should say, you know, more indicative of a near-term exhaustion trade for the downside. So yeah, I think Euro Aussie floats a little higher here. Look for 53.40. Look for 53.80. You know, the median line, the monthly open. This whole region is gonna be pretty big. Questions on Euro Aus? So Euro Yen was your specific question here, and your question was, what's the bearish inval on Euro Yellow? You're still hunting for shorts. So I take every trade on its own merits. We just went over the implications of the Aussie, just went over the implications of the Euro, and where that puts us, you know, basically on a conviction, looking for a rebound and hold above this region on a close basis to suggest there is more juice on the upside. You know, as far as Euro Yen, the reversal again where it happened was phenomenal. 36.23, decent pivot in price, former swing lows from back here in the January opening range for the 2014 calendar year. And then you were followed there by the upper parallel. We talked about that. We took a parallel, if you guys remember in the webinar, off these lows. We talked about the fact that support, right? Support, basically where the opportunity here is you could have seen an interruption before that 100-day moving average. I didn't really think it was going to get this sharp. Remember, the last target that we noted was basically 33, when 32.95 is basic slope support off the lows here. So didn't necessarily think we're gonna rip this to this magnitude, but at the end of the day, you still want to stay bearish, Pooja. In my humble opinion, I can't get constructive until we get through the monthly open. So monthly open resistance is where I would still be looking for bearish inval. Initial resistance right off the bat, you should be looking somewhere in this range between 34.30 and 34.80, or 34.98 would be at 50%. I'm lying. Yeah, 34.80. So you can see former swing lows, former swing highs, 50% retrace, and that would be an area of which you'd start to look for near-term resistance, bearish invalidation at the monthly open. At the monthly, if you make it through the monthly open, it's For me, that's pretty constructive. Pooja, does that help on euro yen? Again, guys, always remember there's a camera button in the top middle of your GoToWebinar screen. Always feel free to take a snapshot of any of these charts. They're all presented on the intraday page, but just in case you want the updated targets or you need to refer to this later, feel free to take that snapshot whenever you need it. Pooja says, okay, thanks, right on. The momentum on the rally made me wonder if our bias still holds. So it depends what time frame you're looking at, Pooja. What time frame were you looking at on the momentum that got you constructive? Well, let me ask you a question. Well, let me answer your question first of all. You're absolutely right. This was like a near-term exhaustion. On the last two lows, divergence in price. Price actually makes a lower low. The oscillator makes a higher low, takes you right back above 30. Bring this into a closer time frame, like a 30-minute chart, and you could see the divergence building right into the low. And on a trade like this, your trigger would have been right there. So divergence into a trigger is usually a pretty good entry. Is usually a pretty good indication, rather, of an exhaustion, i.e. reversal trade. So yeah, the divergence into the trigger break, tested trigger break support again, entry against the stop or against the low here. 33.90 first target. Secondary target, if you're still holding longs, 34.44. But the rebound still counter trend. Yeah, Pooja, I still think that if you get the stretch higher, ultimately it does turn ahead of 34.80. 60-minute RSI about to break 70 on the upward. Well, it looks like it broke on the 30 already. And if 60 does break, 34.45, 34.82. Pooja, levels of interest. Okay, I don't think the whole thing is switched or changed direction. We're just making a rebound within the broader reversal off the highs. Make sense? Okay, thanks. You got it. You got it. Maybe something like this further highlights that near-term target we just talked about, 134.45. Ooh, and for that matter, 135.80. Okay, last but not least, on the menu for today, I have Aussie, and we kind of briefly talked about this already, but 78.86, such a big region, really, really big for me, and basically, I want to see resistance hold here near term. Okay, I want to see resistance hold here near term. All right. So for Habib, my friend, SPX, let's do some drills, shall we? The reason, just for your information, Habib, is I'm much more of a fan of near-term technical price action. The reason things like the equity markets and the SPX specifically have been very hard for me to get a gauge on is just because it's been a straight shot rip. There's not enough back and forth to find intraday levels of interest. And I'll show you what I have on the charts, but as far as trying to get a new game plan set up, tell me what you're trying to do with this, Habib. Are you trying to intraday trade this? Are you trying to take a larger position on a more longer term scope? Because all we're working with right now, Habib, is straight slope. There is nothing on the index to work off of as far as previous historic price action because we're at all-time record highs. Whenever that's the case, your reliance becomes more heavily on measured moves, i.e. Fibonacci extensions and whatnot, and slope. And I think here on the SPX, it's just been a slope. There's really been nothing else to look at. So here's the daily chart. We've been working with this pitchfork off the lows from 2015 and 2016. It's loosely held. I don't want to be a critic and call this a dead-on slope, but last year was pretty damn accurate. Here's the 50 line, resistance, resistance, break, break, both sides on the break saw acceleration, downside break saw acceleration, resistance, 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 resistance. resistance, break, support. And here's the median line, the actual concerted median line. Now, we're probing through this now, and you might think to yourself, well, Mike, isn't that a breach of the median line? It's offering support. Shouldn't we be looking higher? Typically, yes. But if we were to take a parallel and extend it off that late high we made right here in 2016 in April, you can see that that gives us a median line that comes in just higher from where we are right now. So look, guys, there's nothing necessarily to put a dent in the equity market rally. We have to look at things and keep things always on perspective. And while our focus is technical, the fundamentals obviously have larger implications here, specifically on these risk assets. You have to think about where the drive for yield is. Treasuries are basically at zero, right? The yield has been moving higher, but there's a huge fear that there's going to be some sort of major correction or sell-off in the bond market. That being said, really, it's the last game in town. Really, it's the last game in town. All these indices and all these hedge fund providers and all these services are being outpaced their performance by just the broader indice, which is like radical, right? Because your whole point of view investing in mutual funds and all these things is to kind of beat or outpace the broader markets. Well, if you had just been a basic S&P holder, Dow holder last year, it would have been a pretty darn strong year. So, this is the daily chart. So let's see if we can get some near-term price action here of any interest whatsoever for Habib. So here's the monthly open. Yeah, I mean, look, Habib, there's, literally, there's nothing of here that's of interest for me for any type of move on price action at this point. Just being completely honest with you, I'm not going to make something up and just give you an opinion. Look, it's showing conditions of overbought conditions. It's looking a little tired. We've been marking divergence into the highs. Fundamentally, there's nothing to get bearish about. I do think you get a deeper correction early in the first quarter, but trying to time that before getting clerical or justification in price is just a fool's errand. It's just a fool's errand. Is that the November low? All right, well, I'll look at near-term price action. And again, this is what I do before I jump into any positions, Habib. I look at near-term price action, does suggest you have more exhaustion at play. And you look at subtleties in the momentum signature. For example, the last time we probed into the 30 region, well, that was right here. Well, on that rally, once we ripped through, we went right through overbought. So that keeps the focus to the upside, even though you got an oversold condition. Overbought, 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 overbought. Pull back into 30 again, holds. But look what happens on the rebound this time. Starts holding 60 as resistance. So this subtle shift on the 60-minute momentum signature, to me, does suggest near-term exhaustion still on this rebound here, and we should be looking for more of a pullback in the interim. Okay, now this is just really nitty-gritty. Like this is, right before I'm entering a position, this is the kind of nuances that I look for. So from a momentum standpoint, sure, it does look vulnerable for a little bit more of a pullback. Obviously, you have a clear-cut soft pivot right here in price at these lows. If I can get my cursor, right, that gives you 27.60, 27.36. And this is back to the 5th, so this encompasses the entire weekly opening range too. So look, you know what? The best way to play this would be just to use it as a weekly opening range, basic setup. You set your weekly high, you tested the weekly low with precision, the monthly opening range lows rather. And here you are just kind of sitting between 27.60 and 27.36. That's sort of the range break I'd be looking for on initial play. Top side targets, man, it's tough. It's tough for me to give you anything with conviction that I would be comfortable you actually trading off of, Habib. But if you do see a top side pop, I would still think 2,800 is not outside the realm of possibility for a near-term advance here in the SPX. There's just not enough price action. There's not enough back and forth on this, Habib, to give you something that I'd be comfortable really putting my name behind. All right. Sorry. Wish I had more confidence on this one for you. I would definitely bring this up with Jamie. He can give you a little bit more of an approach on this, both from the broader, longer term picture, as well as what the seasonalities say as we head into the start of the year. For me, which I've been, kind of just following the broader fundamental picture for the stock rally in general. There's really nothing here to upset things per se. Yes, the near-term momentums do look vulnerable, but from the broader horizon, I don't necessarily see anything that screams watch out. Now, we get those data prints tomorrow, Habib, which could be pretty big, just as far as the implications. Remember, the whole thing right now is we're heading into the market 2018 with a lot of people still on the vote that we'll get 2 rate hikes. The Fed is still projecting 3, maybe 4. So there is room for mismatch. And obviously, if it ends up being the earlier, which is a smaller degree of normalization this year, that just still continues to put fuel in the rally. So immediately sub 27.59, basically the highs that we made for the month. I do still think that you're at risk for some exhaustion, but all things held constant, it's a pretty strong uptrend at this point. Pretty strong uptrend. Now I would look at lateral horizontal markets in other regions, Habib. I would look at the DAX. I would keep your eye on specifically what's happening in Nikkei for broader risk as well. That seems to be an interesting tell, and what's going on in those markets is pretty interesting as well. But for the SPX, I think it's a little bit trickier. All right. Here's the trade that I've just been following on the Nikkei, okay? And the only thing that I've been staring at with this thing since the start of the year, very, very basic trendline support. Off 2012, tagged again in 2014, tagged again in 2015, broken in early 2016. Here's the first thing I was looking at. And when I saw that spike in November, I was like, wow, right? You don't get a pivot like that, a multi-year, almost 5-year pivot in price with that kind of reaction. Well, we're right there again. And again, we're pulling off. So the emphasis on there, divergence in price, momentum back below 70, all of these things look toppy. But I don't want to be that guy calling for the top, right? And people have been doing that all year long, and they would have gotten spanked last year. So it's an uptrend at uptrend resistance. That's how you got to look at it. So pullback should be counter trend, should be near term lighter leverage. And ultimately those pullbacks, again, we'd be looking for more stable longer term entries on the long side. Habib says, thanks. Hey, you're more than welcome, Habib. Any question is always fair here, man. So I want you to, never shy away from asking any questions that you do have. I'll be more than happy to break down. Even if I don't have a strong opinion on it, I will always give you my honest interpretation on what I see in price. So guys, that wraps us up for this session. I want to thank everyone who attended. This is the final intraday webinar for the week. We'll be back on the free session on Monday on Daily FX, Tuesday, Wednesday, and Thursday right back here on SB Trade Desk. Don't forget, Jamie's on tap at 11 a.m. Eastern in just a few hours with the midweek strategy webinar. Encourage you all to attend there and probe him on your questions as well. We're in this together. Hope all is well, guys. Best of luck trading. Have a great weekend, and I will see you on Monday. Cheers.